I want to focus on the phrase that you guide us to about margins. You talk about slightly lower margins for the rest of the year. What kind of number are we looking at? What kind of margin compression are you expecting? And where is that coming from?
Yeah, we earlier already mentioned to give the guidance at the beginning of the year that we would have on par margins compared to 2018 for the group for the full year 2019. And because of the strike at Stop & Shop in the US, which is our biggest brand, we adjusted it slightly downwards with slightly lower than the 2018 margins. So that's all around the 4%. And the Stop & Shop strike impacted the second quarter, both in sales and in profits. And we feel that after this second quarter, we will have no significant effect anymore about this strike for the second half of the year. Furthermore, you talked about the e-commerce sales in the US, corrected for the strike at 18% growth. We are very confident that for this year, we will do more than 20% for the full 2019 year in the US. And in Europe, we're growing, especially in the Dutch market, very strongly, with a mid 35% roughly growth on e-commerce in the Dutch market. And for the total group for this quarter, we grew close to 30%. So I'm very happy with the e-commerce and online development. I'm very content also with the other brands in the US, which did very well in the second quarter, apart from this from the strike at Stop & Shop, of course. So we had a reasonably satisfying quarter.
Frans, good to speak to you this morning. So that's very clear that you see no significant impact of the Stop & Shop strike for the second half. You talked about your two biggest markets there, the US and the Netherlands, and the performance in the second quarter. Can you give us the outlook for those two biggest markets for the rest of the year?
Yeah, we gave an outlook for the profitability of slightly lower than last year for the full group. Like I mentioned before, that is our guidance for our underlying operating profit. We see in the US that if you look at the numbers, the sales numbers for the second quarter corrected for Easter, which is of course a positive, and corrected for the strike, which is a negative, that we still comped 2.3% sales in the US. But we also see for the second half of this year that we had quite very strong numbers last year in the second half, also because weather, the Hurricane Florence and these kind of things. So we don't see the 2.3% extrapolated for the full half year, but we see it, of course, higher than the present number of 0.2% for the US in the second quarter.
Frans, I want to get a sense. You've been in the job a year. Some people are saying, will Mr. Muller do a big deal? But I want to take you much further forward. I look at beyond meat. I look at meat substitutes. That's going to be worth $140 billion, the size of that market in 10 years' time. How innovative do you need to be as a retailer in terms of meeting my needs and the millennial needs behind me? Do you need to do something radical, like buy new, dynamic, fundamentally different parts to add on to the business, like not necessarily beyond meat, but something conceptually in that area? What's your big vision?
The big vision. I think we do a lot of things on health in general. If you look at our digitized navigation systems on health to make sure that customers can make better choices in their nutrition, that's a big thing we do in all the markets where we are supported by technology. Talking about your Beyond Meat and vegetarian products, both in the US and in the Dutch and Belgian markets, we have very high shares in organic meat, but also in plant-based meat. And I think we are the most innovative player in many of our markets, if it's with Hannaford in Maine, if it's with Stop & Shop in Massachusetts, or with Giant Markets in Giant Markets in Pennsylvania. So I think we have been already for many years a very innovative player in private label, where in the US we have 30% share, in the Dutch markets we have 50% share, and innovative also in new reformulation of healthier products, lower fat, lower sodium, lower sugar, and these type of things.